Hello, everyone. Happy New Year again. For those of you who don't know me, my name is Sam Wong. I graduated from a finance degree and have been working in different various industries, energy, downstream, um, some technical piece, consulting, restaurant, and lately have done some. Last year, I worked for a company that more like supporting a treasury system and had studied about quite a number of different systems. And then I got laid off early of the year, and I'm still looking for jobs. And meanwhile, I think I'm trying to continue brush up my skill and make sure not to get rust. And I always have a vision, idea, and I saw people posting things on YouTube, so I think this is a good area for me to try out. And I did learn a lot of things that I can share with people about this exercise. What does it help me and get me into how I feel about it. It is really a good tool, but unfortunately, I don't have a lot of support right now. So if you listen to this video and you like it and have not subscribed, please make sure to click the subscribe button and give me a like. And you can leave comments. I'll go back to you. I did this analysis back to November 20. If you go back to one of the videos for those who have been following me, and it was having an initial assessment to a week earlier, which is on the 15. As you can see here is the prices on the 15. I had to hide a column of percentage of return on that, but so at the time comparing the November 20 to 15, 6 stocks were actually lower in this list, and that 14 stock will outperform the index, which more than 25% return. And now this year is officially over. I'd like to provide a recap and let you have an idea of percent of return if you have bought these stock and the prices I have recommended. So this is the prices I have recommended, and give you a little bit of history that I actually started to look at these stock recommended prices back then in around end of July, probably August time and September, early September. So just to give you an idea that this list of the prices versus the year end is about the most 3 months differences and gap there. So it's not like a beginning of year you bought this stock up to now. Here's the return for a year. Just bear that in mind. So because a lot of time people are talking about percentage of return, they don't really have an idea what they're talking about. But for simplification purpose, we don't care if it is really take 1 week, 2 months, or a year to get to where it is, and you still calculated the percentage basically by taking the selling price or the current prices minus the buying price divided by the buying price, and it gives you the percentage, and that's called percentage of return. And around November 20, there were 3 negative return, but 3 stopped beyond 100%. And how does it look like now? Really, unfortunately, there were really 2 stocks still in red, which are actually, one of them was still the same AMC Theater in the time of November versus the year end. So on two that negative underperformed, and AMC was seriously incurred loss and ran out of cash flow. If you hear the news, follow them and know that they need 760 million to survive, and yet they only were able to fund 160 million. So the differences between the two, they were trying to issue and raise sales more shares. And right now, I don't know where it's at, whether it's success, people can buy them or not. It's still under negotiation. So the stock have been really, since the vaccine rolled out, it have been actually rolled back to $4 plus. It actually tipped back to $2.12 a year end. This stock again, however, if it's not running bankruptcy, then I think there's a very likely chances if they survive the pandemic, they will go back to $5 and eventually probably $10 in 2 or 3 years. And the other one is Big Commerce. It was doing pretty well in November until December. I don't even know the reasons that the e-commerce stock, like which is Amazon and Shopify as well, were doing pretty weak on the week of last couple of weeks of December. So the stock have slipped actually to now incurring losses at 64.15 a year end. So these two were the one on the list. Unfortunately, wasn't doing well, and I'm waiting for that rebound on the BIGC, which I think it will happen. So this stock have, if you follow my previous video, explained the V-shape recovery 3 times, and also the stock actually only went into IPO on around August time, and you will hit it as low as $60, but it was as high as $160. What you have to know and note that this stock is that I really think this stock has a good potential, and there really not much, no bad news to driving the stock going down. So I look forward for this one in 2021 coming back up. And I'll go through the list very quickly, then I'll kind of give a summary so that you kind of help you out to get some idea, what you want to do in 2021 and put just maybe determine how you want to restructure your stock, and also in the future when I recommend some stock, that whether you're going to buy or follow me or not. So AMD, which is semiconductor, at the last month December, semiconductor was very bullish. So you can see another stock that I bought on the list, also semiconductor, was doing very well. I didn't buy it at a very low price, so $74 lush, and then you actually, at the end of the year, AMD was at 91.71. But apparently in the other stock, TSM, it did a much better grind. You can see it. They were at one point very close around each other, 70s lush, but then TSM was doing much better at the end of 109. Part of the reason is that TSM was also providing chips to Apple, and AMD actually phasing out for those, and because Apple was announcing that they will, basically create the processing chips for their own to support their iPhone. But apparently, iPhone was so many versions so big that some of the contracts and things were still leaving to these other companies to help them out to produce in there. They just can't be self-sufficient from a scalability point. At least at this point, haven't reached out to that yet. So they were still reaching out these companies how them producing those processing chips as needed. And also they also providing other company as well. Just FYI. Then the other one which actually did really well at the very last week of December is Apple. Apple at the time was recommended buying around 110 and now 132.69 to start with. Part of the reason for that is they have actually in December announced that they have to increase 30% of production of iPhone, which meaning that they do have the demand, which when they first produced it, the world with China were not buying them and use their own brand, so it's kind of hurt them. But then now that verification of increasing production is a good sign. Plus, they also announced that they will be producing Apple electric car by 2024. So that is a good news that push it up to 133. In terms of $133, that is actually a record high for a year, because when the split happened, it's only $125 lush at the time. I think it pushed up higher than that, but then there was a P-market, and once the market opened, it was flipped, you would turn it back down. So 132.69 is really very well finished, in terms of Apple. Then Boeing, it was sitting around 150 lush, didn't do anything back in August and September timeline. You will be able to buy this price probably up to October timeline. Then obviously the MAX 737 came out as an announcement that they were okay to pass and were flying. And then after that, American Airlines came in and CEO came out and announced that they will be flying MAX 737 at the end of December, and they were also buying MAX 737. So the stock have apparently do very well to 214. And in pandemic, during March, this stock actually have hit a low to 90 and went back up to $160, and that's where I made a lot of money at that time, and I sold them, and then I bought back later. So just bear in mind that for my investment, I didn't hold them long a lot of time. I buy, sell, and buy back, because for those of you who follow my video know that I'm talking about opportunity cost a lot of time. That's just where I come and create different values than some other people who may consider a long-term investor. But this kind of checkpoint is telling you that yes, while I'm really indulging opportunity cost for my own sake, you actually can hold the stock for a long time and it will give you a good return. We covered the BIGC at the moment wasn't doing well. I really like DT, so I really like to buy back if it hit it back and lower to then maybe $38 around that range of buyback. I didn't get the stock So, but they start at $43. They actually were providing the technology to AWS, and AWS actually giving that to the cloud business to Google and Amazon. So that this some company is a very good company that I actually think they have a solid value because they have contract from this big company. Then Google actually did very well at the time of recommend. They were only 1,300, and at the end of the year, it ended up at 1,751. Despite the antitrust issue, it didn't really hurt it that much. And actually, at one point, it was going about 1,800 on Google and intra highs during the month of end of November, early December. And then the next one, which was actually really, really good, hotel industry apparently have been really returned back very well. What a comeback! So at the time, this higher hotel is only $50-ish, and really end up at 70, close to $75, which is 49% return. And the explanation of this is vaccine news, which really driven to the recovery of the travel and leisure business. So the stock, again, just remember that stock market is 6 months ahead of the curve. So if you price it into that, and also they have been their annual high was about $90 if I'm correct. So they were actually really at this kind of time at $50. And then JD, which is one stock that I own and sold after the 11 November 11. They have actually doing pretty well if you have whether you still hold it or sold it at the time. They end at 87.90 a year end, so you do have 25% return. And actually, this stock I recommend it much later of the time. So for people who didn't buy it around like late September. And in October, early October. JP Morgan also is a big winner in terms of the banking industry because of the Fed will continue buying, doing the asset purchases, and also in the late December, actually they see the economy actually recover pretty nicely, probably. And then they did through the investigation of money laundering and so on with the bank and didn't see any much issue. So Fed will announce that bank were allowed to buy back their share. So because of this news, the stock actually have really gone up since then and end up at $127. So this stock have a very nice return, 49% return if you bought it around 85, and even if you bought it 90, it was still pretty good. Then the next one is another hotel and casino, which I have talked about in my video how this industry will be recovered when vaccine was available. Sure enough, you proved to the point that you bought it around 2050, around that time, in late August and early September timeline, and the stock ended up 31.51, which you will have even in the end of October was still 20. You bought it around that time. So this stock did have to have some patience. It does take, if you bought it at the time I recommend it, it did take about 3 months for it to take off and then eventually hit 50% return. And the next one, MITK, which is a facial recognition company, and the stock went as high as $19, but you slip it back in month of December. You do a couple of opportunity buy point in this around $12 and $14 range. Throughout the time of the August to December, you do have 3 opportunity buy in around those prices. So you will get a pretty nice return on 48% if you still own it today. If you sold it, chances are you do get about 20 to 25% return. And Microsoft, you will buy it at the time of $200, and now it's at $222.42 and that. And the recent spike is because of the new Xbox coming in and competing with Sony. Sony is one of the stock wasn't on the list, but actually it did make a really good return at the time. I talked about it, but only $70, and now it's $106 because of the holiday. I mean, they really pushed it to Sony, the PlayStation 5, and it was really remarkable. There's a lot of good writing about this system and how more sophistication it is. And NCLH, Norway cruise, apparently a lot of cruise still not ongoing right now, still stuck in the dock at the time. But because again, it's 6 months ahead of the curve, and with vaccine coming out, so the stock have really pushed it up from around $15 you will get it to today $25.43 and so it's a nice 72% return if you have bought there. I mean, it doesn't have to be NCL. Actually, it could be CCL. It's around $21 and but it was around $12.50 or $13 range as well, because CCL is a little slightly lower than NCLH, which is another good start. That actually, or you will have by Spirit, and which is another airline that actually will giving pretty good return around that space, but probably not as high as 72%, but still very good return. Then the other end is another semiconductor stock, 420 Nvidia was I recommended. That was coming up with a new processing chips that actually was more for sophisticated gaming system. So the stock have been really skyrocketing since then, and actually differentiate between that with another semiconductor stock like like AMD and STM. So that you're pretty nice return with 24%. And Pinduoduo really did an exceptional job. You start at $68, you end at 177.67, 161%. And it was a big winner due to November 11, which is one of the largest e-commerce day for China. And and it is really a great stock, and you still have a momentum to go up. And I read one of the news, and the analyst said that this stock will have potential go to $300. And actually, Pinduoduo have been benefit, and the stock have gone up after the antitrust investigation of Alibaba and Tencent. So, somehow some stock actually got benefit because they have been, their sophistication and competition is the other side of the big giant company. So but although Pinduoduo revenue was really big as well, so I really think this stock will still be good to buy next for 2021. LVGO have been a very good stock, and stop at 179.77 is measured with Teladoc. Teladoc continue to go up, and it's a very strong and solid stock of the year. I didn't buy that one because I have this one, so I didn't recommend that one. And the TER, which is an AI stock, AI will be another area to look into for 2021. Actually, also for the future, this is nobody would deny that this artificial intelligence will help human beings on a lot of different areas, especially on some dangerous jobs. So the stock actually apparently did really well in 119.89. It's some stock to be. This is still a stock to be considered, even though if now it has 71% gain since September. I think it's August September timeline. And the TPR is another retail stock which did very, very well. And so retail stock have been really rebounded very nicely for the year. And so at the end of the year, 3108, you have 114% return. And I believe the stock actually did really almost hit a record high, or maybe even have beat the record high before the pandemic. And the next one, TripAdvisor. This is a travel and leisure stock that are actually benefiting from vaccine rolling out and the news coming off. That anticipating that we have a reopening of traveling. So the stock have gone up to end at 28.78, 80% return if you bought it 116. Even if you buy it about $19, right? That's still a $9 leeway. Is like 50% return. TSM, the semiconductor stock like I have covered, give you 47% return. And I only recommended one airline, and you could have bought American Airlines, Spirit, or Southwest Airline, but the return is very similar. So around $30, and you end at year end 43.25, which is 44% return. And this one actually, I would see that. And if you have to look at United Airlines, it's probably still sell at discount at the moment, because the one year high, 52-week high was like $90+. So something to consider and think about. But if you watch my video, that I actually recommended another stock called FLY Fly, so which is also related to airline industry, but it's a leasing company. Then the next one, Submit Materials, actually gone up very nicely, 30% return in 2008. Nike is another company that pushing down higher by end of the week of December. Last week December, it started at about $100 range. You probably will end up have to buy 105 and 110 at the time. I recommend this price is really, really low. Empire didn't get it. You have to place a little higher to get it. If you do have got that about $105, $110, well, you end at 141.47, you probably have a 30% return, still pretty nice. And I still think this stock will have potential to grow, and analysts really saying this stock is a strong buy. Then the next one, the XBEV. For those who follow my video, know that I pushed this one very hard, and many people come asking me about this compared with NIO. I like this stock better than NIO, although NIO has been growing stronger. But at some one point of November intradays, some of those days, XPAC actually have a higher prices than IO ahead of NIO. I mean, this stock has been ahead of LI Lee and other China electric vehicle. But if you buy all three, you're all trying to upward at the time. Now you're all trying to downward at the end of December. So you actually gave back some of the gains. But if you bought it around probably $20, you 775 is a little bit low end. You will have an over 100% return. And I do anticipate this stock will continue to be one of the agendas item that going forward for 2021 to have good potential to growth. And they actually on the weekend or maybe tomorrow will come up with their sales for December, which Li Auto already announced that their sales, they beat the expectation, did very well. And I expect that this stock will also follow in that. So there's a momentum potential market open tomorrow. The electric vehicle will be up again 5 to 10%. Yeah. So at one point they do have an issue. We issue additional shares at $45. So my resistance point, or support point, actually what I call, is around $46. Then you break it at the next one with 40. So at one point you did break through to $38 and you rebound back to 42.83 to end it with on the year. So that still have a lot of potential about this stock. Relatively compared to Workhorse, think about it, which go for 900 or 1,000% return, and NIO, which at one point it was also over 900% return. I mean, you really still have a lot of great potential around this stock. Again, this stock, the CEO is a little bit more low profile than NIO, but I still believe in here that this will go very well. And also because of Shanghai extended the free license policy to February. So for electric vehicle, so for people who buy electric vehicle will get the free license plate. How that work in China is that because they have really travel injection in China, so they start to restrict it in certain cities. Not to be so easy to get license plate. Pretty much similar to Philippines, they've done it years ago that you have a certain license plate only do Monday, Wednesday, Friday, another one Tuesday, Thursday, Saturday. The way how you work is not quite by days like that in China, but by time zone. So their time that during the day you have to have a specific licensing will be able to running in Shanghai or Shenzhen or wherever. And at a certain time of the timeline, then you will not restrict it. You can have another different kind of licensing can still run on that time. But if you run it during daytime and got caught running that license, you will really getting fines and provoking a license potentially. So there's a risk of that one. So this is the policy is really great because the license oftentimes is pretty expensive in China as well. And then there's three other ones, which is these are all basically ETF, and they have done very well. ETF this year, IPO is actually 32% return, and then BLK 25% return, and then this will stay a little bit worse, it's only 9% return. And in summary, here is what I want you to see of my performances for the year. That out of this 28 stock, there's only 2 that had negative return, which I show you. But I still believe BIGC will come back. AMC, well, if you run balance sheet, then too bad. But if not, it probably will go back up to $5. Still unknown. So you don't lose money on that one, but probably not make much on AMC since my recommendation price was around $4. But for those who buy $8 or $9, too bad, right? Probably lose a lot of money. Hope they always sold their share at a loss. And then the 6 hour 28 have returned 5 to 24%. 14 hour 28, which are half of them, is range of 25 to 50%, which means you actually still beat the, well, depending which one you're looking at. If you compare to the Nasdaq index, Nasdaq for a year have provided a return of 45%, around 45%. So some stock in the 14 did beat that, some not. But if you compare to S&P 500, which only around 14-ish% from beginning of year, from beginning to the end of the year, then you definitely beat the quick time. And Dow only have 7.25% return at the beginning of the year compared to end of the year. So you definitely beat that one. So, and then of the 3 items, it has 70 to 80% return, and the 3 of them are over 100% return. So in summary, Pinduoduo and electric vehicles, it had given an over 100% return. It was really great year. The e-commerce businesses was actually one of the winner because of the work from home or stay home situation. And the electric vehicle was cited to be future that Chinese government, Europe, and US have the designated, and Biden administration as well have an eagerness to really drive environmental friendly. So that helps a lot. We'll see if the momentum continued in 2021. Xbev, which is my favorite stock, which is on the list, was as high as $72 in November when all the electric vehicles were all the way up. Despite the decline, it was all still around 141% return to end it with. The other set of big return was the travel and leisure stock, NCLH and Trip, which I went over earlier. With vaccine being rolled out, these stocks better have opportunity to grow. Just bear in mind the market is 6 months ahead. So a couple of these stocks like Trip, I think you still have some room compared to a year-end high from year high for 2020. So you could still probably, if the market reopen, they may still have momentum to go back up even more. Bowling was around 150 at the time we recommended, and actually wasn't doing much from August to October because they really literally have no business that at those times. Just sat there and reached 214 at year end, and most of it because of Max 737 were allowed to fly again, and also the vaccine rollout. 3 to 5 years ago, just bear in mind that if you check out bowling was about $400-$500 price range. This suggested that bowling could be still at this kind of price right now, but chances are if you buy it at 214 today, you may have to wait for 2 or 3 years before you reach $500, right? Just bear in mind, building an aircraft is a very specialized business. It requires a lot of expertise. So Boeing have been the number one company because this aircraft building industry is actually only a field. And also Boeing also help out on the defense industry as well. Just bear in mind with what they know and the technology they have. So this stock will have some potentials in the future. But I'm not necessarily telling you to buy right now. And analyzed stock also has a very nice return given optimism about vaccine and business reopening. Like it also has 40% return for those who watch my video. Note that I recommend buying this stock or DECK, DECK. IPO was really hot and over 100 company will issue IPO in 2020, and it will be projected to have Roblox will be projected to be also issued an IPO this year, which is one of the very popular games that my niece and nephew love to play. They can stay there for hours playing it. So I think this one have a really good potential. So the ETF gave a very nice return, 32%, along with a BRAKB.B, which is Warren Buffett holding. He bought some Apple. He done some Apple. He bought Apple. Then he bought the BYD, which is one of the electric vehicle in China. And he bought some Japanese holding to offset some dollar devaluation and hedges. So his portfolio did pretty well, and what he known at is his company always a consistent return of 20%, which this year again he proved it did that. While mine was earlier of that, I didn't use the beginning of the year, but I know that they actually have more than 20% return. Energy and real estate sector were not doing very well this year, 2020. So XLRE only had 9% return. I think travel and leisure retail still have some room to go, and their growth sector that will be the leader for this year. So definitely you can watch my other video that I recommend who are the growth stock, who are the growth sectors are. What are some of the example of the stock that can consider buying. If you like this video, please give me a like. I hope you all have a wonderful weekend, and 2021 we'll be all making more and more money. Thank you.